बैक टू अवर चैनल शेयर की तबीयत बुल और बियर। आज हम एक नई सीरीज चालू करने जा रहे हैं कि जिसमें हम बुक रीडिंग का भी रिलेटिंग टू शेयर मार्केट होगा वो भी हम देखते जा रहे हैं। और हर एक चैप्टर हर दिन में अपलोड करते जाऊंगा। और आप मैं तो ये ऑडियो टाइप एक बुक रीडिंग है, तो आज आपको अच्छा लगेगा ऐसा मेरे को लगेगा। तो प्लीज़ शेयर कीजिए, सब्सक्राइब कीजिए और क्लिक ऑन बेल आइकॉन टू अपडेट और बुक रीडिंग रिलेटेड नॉलेज। ओके, तो ये भी हम शेयर मार्केट के रिलेटेड ही होंगे सब बुक, और यहाँ से आपको नॉलेज मिलता रहेगा। तो हम फर्स्ट बुक देखने जा रहे हैं, हाउ टू अवॉइड लॉस एंड अर्न कंसिस्टेंटली इन द स्टॉक मार्केट। ये जो बुक है वो प्रसेनजीत पॉल इन्होंने लिखी है। प्रसेनजीत पॉल जो है वो सेबी रजिस्टर रिसर्च एनालिस्ट है, जो इन्होंने स्टार्टिंग इन्वेस्टिंग इन द स्टॉक मार्केट at the age of 18 and has a history of identifying several multi-bagger stocks like Kaplan Point Lab, Canfin Homes, Ajanta Pharma, Muir, Unicotter, Kobay Medical, etc. आप ये बुक क्यों पढ़ रहे हैं? तो हम बोल सकते हैं ये बुक जो है ये पढ़ रहे हैं आप क्योंकि इसमें आंसर मिलता है। आर यू सफरिंग लॉस इन इक्विटी इन्वेस्टमेंट? डू यू वांट योर हार्ड अर्न मनी to grow consistently? Do you want to learn easy method for selecting great stock? If any of the above answer is yes, then the book will be a perfect guide for you. Okay, this book is written in a simple language. This book with helpful in selecting fundamentally strong stock for consistent return. Second is proper construction of equity portfolio. When to buy and when to sell stock and avoiding loss in equity investment. So this book is related to only based on these factors. Okay, so now we are reading this book. So this book is published by Paul Asset Consultant Private Limited. Now there are 11 chapter and 120, there is 120 uh, 214 pages. Okay, total book are there. So we are starting from acknowledgement. So acknowledgement, this book has been my dream project for many years. Since 2010 I have been fortunate enough to interact with and learn from so many individuals that my dream has finally become a reality. First, I would like to thank my family for their unconditional love, support, and motivation. Special thanks to thousands of our subscriber interaction with thousands of retail investors across various market situations helped me to realize the difficulties of small investor. This book is an attempt to solve their issues and to assist them in earning big from the stock market. A big thank you to my associate Abhijit Anand. Whatever question I asked you, you never turned me down. He had a tough job to read and modify the manuscript and also contributed significantly to my entrepreneurial journey. Last but not least, special thanks to Microsoft Corporation and Alphabet Inc. for tools including MS Word, MS Excel, Google Drive, and Google Doc. I realized the real potential of MS Word while drafting the manuscript of this book. Without these tools, this book could not have been written. So this acknowledgement is written by Mr. Prasenjit Paul. Okay, so okay, then Prasenjit Paul, the writer, gives a second way second chapter, which shows that why this book is. The question is why this book, why we choose this book. So for that purpose, okay, they elaborate about the books are. There are hundreds of books out there claiming to answer the question of how to make money from stock. Yet despite this, a majority of retail small investors suffer an overall loss in the stock market. Since 2010, I have interacted with thousands of retail investors and have realized that the reason so many people lose money in the stock market is because there are too many misconceptions among investors. Further, many investors prefer to chase stock tips to earn quick bucks. There are also plenty of free trading tips available across social media: Facebook, Twitter, WhatsApp, etc., business channels, and print media. Still, many investors end up losing big in the stock market. I realize that if I can communicate all the reasons people lose money, then many individuals can save their hard earned money in this market. As an investor, your priority should be capital protection. The first two chapters of this book are entirely dedicated to capital protection. This book is my attempt to save the hard earned money of small investors in equity investing. Investing in high quality businesses, stock at the right price, and holding them for a reasonable period is the only way to create wealth. It does not require an MBA in finance or equivalent degree to select high quality stock. Stock picking is often considered one of the most complex subjects in the world. However, anyone from any background can master the art. It just requires passion, hard work, and dedication toward the stock market. In this book, you will find various easy to implement methods and practical solutions to earn consistently in the stock market. During my college years, I read dozens of bestseller books about the stock market. One such notable book is One Up on Wall Street by Peter Lunch. I learned a lot, but at the same time, I struggled to finish the book. I used to sit with the dictionary while reading the book. It was very difficult to grasp the proper meaning due to very sophisticated English. Undoubtedly, One Up on Wall Street is one of the finest books that I have ever read, but the experience of reading was, for me, painful and tedious. I had a similar experience with another bestseller, The Intelligent Investor by Benjamin Graham. It took me 2 years and several attempts to grasp the full meaning of that book. I gifted it to some of my friends. All of them gave up after a few chapters, claiming that the stock market was boring. This is when I realized that I should write a book simplifying this complex subject. Aside from reading books, I learned a lot from a very famous web portal, Investopedia. Even here, the subject is presented in such a manner that many readers may lose interest and find it boring. I agree that the stock market is a very complex and vast subject, but at the same time, it can be presented in an interesting and easy to understand way so that small investors find it interesting and learn more about it. This book is my attempt to present the complex and vast subject stock market in an easy to understand and interesting way so that even 18 years old from any background can grasp the idea without difficulty. A majority of best selling books on the stock market are written based on the US stock market. While reading those books, I struggled to relate with the Indian stock market. Over the last few years, my interaction with thousands of retail investors helped me to realize the necessity of writing a book solely based on the Indian stock market. Many of our subscribers occasionally ask me to name a good book that is written in an easy language and entirely focused on the Indian stock market. I think this book will serve the purpose. The language used here is simple, ensuring that anyone from any background can understand it without difficulty. Solely focus on the Indian stock market with many practical examples. This book is perfect for those who are looking to learn about the subject with minimum efforts. So ask yourself 1. Are you looking for easy to implement method that can help you to avoid a minimum loss from equity investing? Second question the writer is asked is, do you want your hard earned money to grow consistently and steadily over the years? Third question is, are you looking for an easy to understand and interesting book to teach you about the key aspect of the stock market? 4. Above all, are you looking for a tension free investment journey for a happy and prospective life? If your answer is yes, then keep reading. This book will not disappoint you. So these are the these are the index, or we can say these are the uh, these are the telling about the books. How they are written in simple languages. So now we are moving towards the first chapter, how to avoid loss in the stock market. Introduction. Ask your friend, neighbors, or relative about stock market investing. Most of them will discourage you by mentioning it as another form of gambling. Many individuals still believe that there is no logic behind the stock price movement. Those who earn big from the stock market are just lucky. Cont- Contrastingly, the interesting fact is that almost all billionaires in the world have created their fortune through the stock market, either directly or indirectly. Directly refers to the direct stock investing, and indirectly refers to listing their companies on the stock market. One of the world's richest people, investors and philanthropist Warren Buffett, created his fortune from direct stock investing. Other well-known billionaires including Bill Gates, founder of Microsoft, Mark Zuckerberg, founder of Facebook, and Larry Page, founder of Google, made their fortune by listing their company on the stock market. Even in India, you will find many billionaires investors such as Rakesh Jhunjhunwala, Radhakrishnan Damani, Vijay Kedia, who earned their entire wealth from direct stock investing. My question is, if stock market investing is another form of gambling, then how have these billionaires created their fortune from the stock market? You may earn once or twice from traditional gambling, but it is not possible to become a billionaire by gambling. Can you say they were just lucky? Luck can favor once, twice, or even thrice, but successful billionaire investors are consistently earning from the stock market over several decades. A gambler cannot make billions consistently. Luck is not enough to create a billionaire, so there must be a different story. On the other hand, many retail investors lose their hard earned money in the stock market. In this book, the term retail investors is widely used. Retail investors refer to those who have a full time job or a separate source of income and invest or plan to invest a portion of their saving into the stock market. You need to understand why maximum retail investors lose their hard-earned money in this market while a small group of billionaires investing and create their fortune. To avoid losses in the stock market, you first need to know the reason of losing money. I am going to share a real life example that will explain the reason. Existing equity investors can also correlate with the following story. An example worth sharing. A few months back, I was having a conversation with an investor, Rohit, and I was surprised to learn that he had lost around rupees 10 lakh in the stock market. During the last 5 years in the stock market, he had applied various techniques, followed many analysts, and ended up with a cumulative loss of around rupees 10 lakh. On several instances, he had made money. These individual profits, however, were inconsequential compared to his overall massive losses. I am dividing his stock market journey into four phases. Let's have a detailed look at each phase and let's analyze exactly where he went wrong. Phase 1. Around 5 years ago, Rohit did not have any idea about the stock market but was eager to invest. One of his friends was a stockbroker who used to trade regularly. Rohit was interested but had no clue how and where to begin. He approached his friend who helped him with trading and demand account opening. Rohit then handed over an initial amount of around 1 lakh to trade on his behalf. That was the best option as he did not have much knowledge about what and how to buy and sell. Initially, everything ran smoothly. His broker friend would give him daily news based tips and help him trade on whichever stock he recommended for that day. At the each of each day, Rohit would receive a phone call regarding the day's earning. After some initial gain, Rohit handed an additional 50,000 to his broker friend for trading. Why would not he? He had already earned 20% profit with no technical know-how. All of a sudden, the situation changed. There was no trade confirmation over a few weeks. His broker stopped calling. Rohit was worried. Then he discovered that 50% of his initial amount was wiped out. Rohit was shocked. For the first time, investors a 50% loss on his invested amount was hard to accept. He later learned that because of an unfavorable macroeconomic situation, the market crashed badly and things would not be improving anytime soon. Deeply frustrated, Rohit instructed his broker friend to sell his entire holdings. While closing his trading account, he figured out that, including brokerage and other charges, 55% of his invested amount had been lost. Where did he go wrong? In the stock market, blindly following your broker or a friend may cost you badly. Have you noticed whether you gain or lose, your broker always remain in profit? You must pay brokerage for every transaction, buy and sell. Your broker can earn only if you trade. So it's obvious that your broker will encourage you to buy and sell frequently. Your broker has a job, and that is to make money for him. While you are determined to earn from the stock market, your broker is also determined to maximize his own income. Thus, maximum brokerage brokers do not put their client first. They will encourage frequent trading. Whatever the result, here the problem arises. The more you trade, the more you risk losing, and the more you broker's income increases. In the latter part of this chapter, I will explain why frequent trading increases the chances of losing money. Big brokerage houses often send stock tips via SMS and email to their client to encourage trading. Sub brokers are pressurized to meet minimum turnover target. Sub brokers can also lose their license if they don't meet the minimum trading volume. It is the retail investors who are affected the most in this entire process. You might have also noticed that brokers are always ready to reduce brokerage if you trade frequently in large volumes. This is an indirect encouragement to trade more so that they can gain big irrespective of your position. Phase 2. Rohit had closed his trading account after the first incident. I was eager to know what inspired him to come back to the market. 6 months from the first bitter experience in the stock, Rohit started following few business newspapers regularly. For stock tips, watching television channels like CNBC, browsing the internet and reading newspapers becomes an obsession. This was at a time when the equity market was very strong, known as bull market. Almost every day, the market touched new heights. Most of the stock were in an upward trajectory. Various analysts on the television and in the newspaper were also expressing their optimistic view. Many of them were making encouraging statements such as, "This time it is different. The market will continue to rise for at least the next 2 or 3 years." Rohit was tempted and was eager to make the most out of this situation. Without wasting much time, he applied for a new demat and trading account. This time he became associated with a reputed broker. He was eager to enter the market to earn some quick bucks, so he opted for intraday trading. The best part about intraday trading is that tips are available for free in various newspapers and on television channels. His broker was ready to provide up to 10 times the margin for intraday trading. That is, for every rupees 100 in his trading account, he can trade in values worth rupees 1000 in intraday. He dedicated rupees 50,000, so with this amount he could trade up to rupees 5 lakhs in intraday. Everything was great. There were plenty of free trading tips and enough margin money for trading. There were several instances when Rohit made a profit from these tips. However, just one or two loss making trades wipe out the entire gain earned from several profit making trades. This is a peculiar problem. Gains are always small when compared to the losses. Rohit could not figure out exactly where he was going wrong. He had applied stop loss as per analysts' recommendation, but often the stock started its upward journey after touching stop loss. After 4 months of trading, he took a break to calculate his overall gain. The result was shocking. Despite various successful trades, his initial capital did not appreciate at all. Instead, he had lost 20% of his overall investment. The increasing point is that during these 4 months, around 70% of his trade were successful. He made money on those occasions. Yet the other 30% of loss making trades wipe out the entire gain. That was frustrating. Despite keeping stop loss and target, he ended up making small profit on successful trades and losing big on unsuccessful ones. For example, on one occasion Rohit purchased Reliance at rupees 100. It, it hit its first target of rupees 110 and he booked a profit of rupees 10. Another day he purchased Reliance at rupees 800 and put stop loss at 790. However, the stock crashed so badly that it reached 780 without touching 790. So he was forced to sell at rupees 780 and book loss of rupees 20 per share. Rohit was deeply frustrated, failing to understand why the market was behaving in such a way. Where did he go wrong? Rohit went wrong from the very beginning. Intraday trading is almost a guaranteed way to accumulate losses. There are almost zero examples of people who consistently make money from intraday trading. Throughout the world, you will not find a single billionaire who made his fortune only from day trading. You can make money once, twice, or thrice, but you are bound to lose after that. Generally, a loss is always greater than a profit. Try it yourself. Take, take day trading tips from anywhere, from any analyst. There are many paid stock tips providers who claim a 99% success rate. Follow their tips, trade intraday, and check the result. It may sound bitter, but the reality is that not a single market analyst can help you create wealth from intraday trading. Remember the indirect encouragement from Rohit Broker. He had rupees 50,000 in his trading account. However, his broker allowed him to trade values worth rupees 5 lakh in intraday, that is up to 10 times the original amount. This is called margin trading and is an excellent way to make money for your broker. Phrase 3. Rohit had learned his lesson in day trading and was determined not to repeat the same mistake again. He was now more careful but also highly optimistic that he could earn big from the stock market. The only problem was that he had limited funds. He started accumulating a few well known stocks and planned to hold them for a few months. His portfolio was showing around 20% gains in 10 months. Following this process, he accumulated around 8 lakhs. During this time, he came across an attractive offer, loan against shares, in which one can keep stock as collateral for loans. Depending upon the stock, one can receive a loan of up to 70 to 80% funding of the total net worth. Banks have the right to liquidate collateral stock if you cannot maintain minimum collateral value. Rohit did not think twice. He was getting around 20% annual return from his stock. Considering the 10-12% interest rate on a bank loan, it was an attractive deal. So, he kept his entire investment as collateral and did not hesitate to take a loan for investing in shares. Things were going fine as long as the market was moving in an upward direction. Rohit was happy to notice that his investment was growing at an exponential rate. For every percentage increase in share value, the bank was ready to provide additional loans. Rohit was planned for a more leveraged position. However, this did not last long. Suddenly, the stock market took a U turn. Within 10 days, Rohit's portfolio value dropped by around 20%. As per the bank term, Rohit was obliged to maintain the collateral amount, but with further correction in the market, he was in a big crisis. He was forced to sell a part of his investment to maintain collateral. Things were worsening as the market continued its downward journey. There was widespread pessimism in the stock market. Equity analysts who were predicting big targets just a few months back were also expressing their negative view. Rohit was not able to swallow the decline in his investment. Meanwhile, the bank continued to pressurize him to maintain his collateral. Things were spiraling out of control. Eventually, Rohit sold his entire investment, mainly due to fear and pressure from the bank. Over the past 2 years, he had accumulated around 10 lakh. Just a few months ago, he was in a good position, but he ended up with a 25% loss. The entire loss was because of forced selling. Had Rohit avoided the loan against share scheme, he would not have been forced to sell his stock during the market downturn. Where did he go wrong? Investing in stock with borrowed money is a dangerous practice unless you have enough expertise on the subject. This practice can exponentially increase your gain and multiply your loss. Many sophisticated investors leverage their position. They know risk management. They know when and how much to leverage, and above all, they have in depth understanding of the subject. Figure out whether you have enough expertise or not. For retail investor, it is better to stay away from loan against share scheme. During good times, any investor can do well, but what separates the intelligent investor from the rest is the ability to minimize loss during a market meltdown, a bear market. Many investors opt for loan against share during good time. After 1 2 years of good return, once you start believing that you have mastered the game, market inevitably reach a lesson. Leverage position can also result in bankruptcy during market crashes, so it is always better for to avoid the same. Phase 4. Enough was enough for Rohit. After 3 unsuccessful attempts, Rohit planned to associate with a professional stock tips provider. He did an internet search and found many names. Many of them claim a 90% success ratio and show cause fabulous past performances. Rohit was confused and so he subscribed for a 3-day trial from various stock tips providers. After the trial, he started receiving many phone calls from them. One such service provider mentioned that he could make money not only when the market goes up but also when the market goes down through future and options. Rohit was surprised. Earlier, he had suffered losses mainly during a market crash. The opportunity to make money whilst the market was in a free fall was attractive enough to catch his attention. He was eager to purchase the services provided by the stock tips provider. The only problem was that they were asking for a huge subscription fee. He delayed his decision. However, they kept calling him and encouraging him to sign up. They even agreed to provide 3 trial calls. Encouragingly, all the calls hit the target. Moreover, they assured 100% monthly return from their future and option trading call. Rohit was convinced. He paid a hefty subscription fee for future and option packages. Rohit was ready to invest 5 lakhs to begin with. He started with rupees 3 lakh from the first call. Surprisingly, it was showing a 50% gain within 15 days. He realized the magic of future trading and decided to commit extra funds. He had made handsome gains from the first call and was eagerly waiting for the next call. He invested a larger amount in the next trading tip. What he did not realize was the uncertainty that future and options carries. No doubt, future and option can provide an extraordinary return, but it can also lead to unlimited loss. For every correct bet, you can earn 50 to 100% return, whereas a wrong bet can lead to 100% loss. This is what happened to Rohit. He had earned a 50% return within 15 days from the first trading call and lost 90% from the second call. Where did he go wrong? Trading in future option is the worst decision any retail investors can make. You can lose your entire life savings. Many analysts or stock tips provider will claim that one can earn up to 100% return within a month from F&O trading. My question is why they themselves does not trade. What the necessity of selling tips when you can earn 100% monthly return from your own analysis? If you can take a bank loan of 10 lakhs and earn 100% monthly return, then after repaying the bank loan, you can become a billionaire within 2-3 years. Yet you will not find a single person who become a billionaire through future and option trading. A lesson to take here is that if any stock tips provider tempts you for future and option trading, ask them the above question. A quick internet search will reveal many stock tips provider claiming such extraordinary returns from their trading calls. Yet reality says something different. Don't fall into their traps. Stay away from stock tips provider who claim extraordinary returns. Basically, F&O is meant for institutional investors and hedge funds. Big companies or high net worth individuals hedge their position using F&O. Future trading is a great option for hedging. Retail investors who jump into F&O for extraordinary returns mostly end up with lots of disappointment. Intraday, short-term trading and F&O all are nothing but a form of gambling. So now sure short way to lose money in the short stock market. ओके अभी ये 1.3 चैप्टर चल रहा है. ये बता रहा है कि श्योर शॉट वे क्या है टू लूज मनी इन द स्टॉक मार्केट. Summarizing the above topic, retail investors will lose money most likely from trading in the stock market. Here trading refers to intraday, futures and options and all other activities where you purchase stock to sell and generate a profit within 1 to 15 days. Retail investors refers to the individuals engage in some other full-time profession and investing a portion of their saving into the stock market. Why trading is a sure shot way to lose money for retail investor. Trading is meant for institutional investors and hedge funds. Only they can consistently make money. Being a retail investor, you can make money from one, two or three successful trades, but a single unsuccessful trade will ensure your entire gain. erase your entire gain. Following are the reasons why trading is a surefire way to lose money for retail investors. You don't have enough expertise and time. It requires vast knowledge, experience, time, and discipline to earn consistently from trading. Admit it, you don't have that amount of knowledge, experience, and discipline. Most importantly, retail investors cannot dedicate an enormous amount of time as they are already engaged in some other full time profession. Trading is a mentally exhausting, full day time consuming process. Being a retail investor, if you believe that you are wise enough for trading, then you should immediately leave your job and apply for the job of professional traders. There is a real shortage of quality professional traders in the industry. Consider brokerage and taxes while calculating profit and loss. Suppose you purchase a stock at rupees 100 and after a few days you sell it at rupees 110. Apparently, it seems you earned rupees 10, however, the actual figure is different. For every transaction, buying, selling, you need to pay brokerage, security transaction tax, STT, service tax, and exchange charge. You also need to pay short term capital gain tax, that is 15% of profit in India, to the government. Normally, we don't consider these fees while calculating profit or loss. Let's calculate net profit and loss in two different cases. In the first transaction, consider purchase price as rupees 100 and sell price as rupees 110, that is a gross gain of rupees 10. In the second one, purchase rate at rupees 100 and sell rate at rupees 90, that is gross loss of rupees 10. To simplify the calculation, one I am considering 1% on total turnover as a brokerage plus STT plus service tax plus exchange charge. So you need to pay rupees 1 on every 100 both for you buying and selling transaction. So net profit and loss calculation from trading. First transaction, second transaction. First transaction, the buy rate is 100, sell rate is 110, so gross profit loss is 10. Brokerage plus STT plus service charge, exchange charge, both on buy and sell side is 1 plus 1 is equal to 2. So short term capital gain tax 15% on the profit, that is 1.5. Net profit or loss net gain is equal to 10 minus 2.2 minus 2 minus 1.5 is equal to 6.5. Second transaction, buy rate is 100, sell rate is 90, so there is a loss of minus 10. Brokerage, STT, service tax, exchange charge both on buy and sell side is 1 plus 1, 2. Short term capital gain is nil, so net loss is 10 plus 2, 2 relating to brokerage charges, so is equal to 12. The above table depicts a surprise result. A gross profit of rupees 10 turns into a net profit of only rupees 6.5, whereas a gross loss of rupees 10 turns into a net loss of rupees 12. So, a 10% gross profit is only 6.5% net gain, whereas a 10% loss is a 12% loss. Do you calculate net profit and loss in such a way? This is another reason for losing money in trading. The odds are against you. The system is designed in such a manner that it is next to impossible to make money consistently. Broker, stock exchange, and government, only they can earn consistently from trading. Every time you trade, you need to pay all of them. Do you really want to make them richer? Your broker, your stock exchange, and the government are the only ones who can become rich from short term trading. Why free trading tips are dangerous? Why would someone provide money making ideas, stock tips, at free of cost? In other areas of life, do you get any quality product or services for free? Of course not. Nowadays, you even need to pay for pure drinking water. From watching movies to, to reading the newspaper, everything comes at a price. Occasionally, retail chains like Big Bazaar, Pantaloons, etc. offer free gift vouchers. Why? Their motive is to bring back their existing customers for higher value shopping. Tune into any business channels and you will receive dozens of free trading tips each day. Your broker is also eager to provide free trading tips. Dozens of websites offer free trading idea every day. You can find tips on Facebook, Twitter, WhatsApp, Telegram groups, and many more. The list of free trading tips providers would be very long. None of them are doing charities. None of them wants to make you rich. Let's have a detailed look at their motives. Motive 1. Many operators provide free trading tips after offering the same to their paid clients. The stock price are manipulated, which help only their paid clients. Suppose I have two websites, freetips.com and paidtips.com. One is for providing tips to paid clients and another for free clients. However, clients don't know that both websites are operated by the same person and or entity. So what I am doing is offering tips to my paid clients first. After their purchase, I am distributing the same to free subscribers. While free subscribers buy the same stock, the price moves in an upward direction. At the same time, I am recommending profit booking or exit call to paid client. Thus, free subscriber gets stuck at the top. So, my paid subscribers are getting a good return at the cost of free client. My motive is to collect more subscription fee from paid clients. This way, one can easily manipulate the price of low volume mid cap and small cap stock. Motive 2. Operators often offer free tips just to have a smooth exit at a hefty profit. What follows is a real life example. During the 23rd and 24th July 2014, I received an SMS which read, Sure shot buy call by Naisargik BSC code 531365 at rupees 175. Target rupees 350 within a few weeks. The company is in the micro cap industry and I had never heard the name. Trading volume was very high on both the days and the stock price had jumped significantly. The pattern suggested that the operator had sent the same SMS to thousands of retail investors and many of them purchased the stock. The most surprising fact is that on those days, three operators sold around 1,20,000 quantities worth rupees 19 lakhs 1 crore 97 lakh 69,667 around 2 crore. So operators were selling stock and simultaneously sending an SMS to thousands of retail investors to buy for a guaranteed target of doubling their money. Over the next 10 days, the stock went into a free fall state and the price reached below rupees 100. There were no more buyers left and as a result, it got stuck at this low rate. At the time of publication, the stock is traded around rupees 4. Thousands of retail investors lost around 90% or more of their investment and expressed their anger in the moneycontrol.com forum. If you want to see for yourself, check out the historical data from BSC website. Check out moneycontrol.com message board discussion. You will find the proof of this entire episode and see how thousands of innocent investors were trapped into losing their hard-earned money. Nobody is there to save them. With the advent of mobile phone and internet, such practices are common. Be careful the next time you receive a similar communication. Why paid trading tips are sometimes more dangerous. You can lose your investment amount from free trading tips. But what about paid tips? Surprisingly, paid tips can be even more painful because you can lose not only your invested amount but also your subscription amount. Just conduct a basic internet search. You will find several trading tips providers showcasing fabulous past performances, promising 50 to 100% monthly return and offering a few day free trial. Let's have a look at how anyone can trap with a free trial. How paid stock tips scam works. Suppose I develop a website for stock tips and offer our latest stock trading strategy developed over 10 years of rigorous research can predict the stock price movement with 99.99% accuracy. Join our 4 days free trial for intraday tips and check out yourself how you can earn big from our highest accurate trading calls. The statement 4 days free trial will cause many enthusiastic investors to immediately sign up. One can purchase a database, email ID, mobile numbers of Demat account holder to run this scam. In such a manner, I can collect the mobile number of 5,000 traders. Consider Rohit as one among 5,000 subscribers. Each day I will send a single trading call via SMS. So here goes my 4 days free trial. Tip 1. First day. Reliance Industry will move up today. Buy Reliance for immediate intraday gain. Reaction. Reliance really went up. Rohit felt good. However, he is confused and not sure. It may be just because of luck. Because of luck. Anyone? Three more free trials calls are left. Let's see what happened. Tip 2. Second day. Reliance will go down today. Short sale and gain from intraday. Short sale refers to selling first and then buying at a lower rate to make a profit. Reaction. Reliance really went down. Great. Rohit is amazed by the performance. Even though the market moved up, the particular stock went down, just as the tip predicted. There must be something with the trading call. His confidence was built up. If the next tip works, then Rohit can surely invest some money. Now he is excited to receive the next call and verify the performance. Tip 3. Third day. Reliance will go down today. Short sale and gain from intraday. Reaction. Reliance really moved down. Rohit is now surprised and impressed. He cannot believe that for three consecutive days he received a 100% accurate call. The strategy is amazing. He is now ready to trade as per the last 4 steps free trial tips. He already started calculating how soon he can make a big gain on his capital. He cannot wait for the last free tips. Tip 4. Fourth and final day. Reliance will move up today. Buy for intraday gain. Reaction: Rohit has put down rupees 1 lakh to make some quick bucks. He was nervous at the beginning as there was so much upward movement in the morning trade. However, the stock really moved up during the afternoon trade and he was in good profit. He booked the entire profit as per the call and was super excited. He decided to follow the tips at the cost and thus was sure to earn a lot of money in a brief period. He was ready to sell his other investment to dedicate the entire sum in trading calls. Rohit can now visualize how he can become a millionaire by subscribing to the tips over the next 1 2 years. 4 days trip trial tips are over. Rohit and many other already experienced the magic. 4 consecutive calls were correct. 100% success rate over a 4-day period is amazing. The next SMS says, you already experienced our 4 days trial and noted how accurately we predict stock price movement. Years of hard work and research help us in developing such a highly accurate strategy. If you want to continue with our daily trading calls, it would cost rupees 30,000 for 6 months. You can also subscribe to our 1 year package at a discounting rate of rupees 50,000 only. You can expect the same incredible accuracy as our 4 free trial calls. The entire subscription cost will recover within weeks from the profit of our trading calls. The subscription amount is high, but Rohit is so impressed that he signs up and started dreaming of making millions within a few months. The tips continue from the very next day, but there is an issue. The tips are not all working. Out of 10 intraday calls, 4 to 5 are working and the rest are not. Rohit is frustrated. He already invested a sizable amount and is starting at huge losses. Every time he thinks of recovering the loss, the opposite happens. The loss continues to widen. Rohit got trapped in a stock tip scam. Now let's see how this scam works. Initially, I had 5,000 subscribers. I divide them into two groups, 2,500 each, Group A and Group B. I send a buy call to Group A and a sell call to Group B. Now, either the stock price will move up or down. So, one group will make money. I already noted which one is correct. The stock moved up, so the buy call to Group A was correct. I retain Group A and discard Group B. Now I have 2500 subscribers, Group A, and repeat the process. Divide the 2500 into two groups. Send a buy call to one and sell call to another. One must be correct. I again retain the group that made money and discard the group that received the wrong trading call. I repeat the same process for 4 consecutive days and end up with a group of 312 people who receive all 4 correct tips. Rohit is one of those 312 people. Now, you can imagine how people get trapped in these scams. One can easily reach out to those 312 target subscribers over the phone for follow up and to chase a final subscription payment. Out of 312, even if 50%, 156 subscribers opt for a period of 6 months subscription, then one can easily earn rupees 46 lakh 80,000, nearly 46 lakhs. 156 into 30,000 is equal to 46 lakh 80,000. So earning 46 lakh by cheating others is a serious deal. The beauty of this strategy is after getting one wrong call, the same person does not receive further SMS. Out of the initial 5,312 subscribers are getting a correct call every time and thus become an easy target. By the way, never ever try and such a trick for earning quick money by defrauding others. Always remember the law of karma. Whenever we put out in the universe is what comes back to us. In real life, you will find many trading loss tips providers claiming 90 to 95% success rate. Just conduct an interest search with intraday tips or trading tips or stock tips in India and you will find 50 plus websites offering such free trials. Interestingly, many of them are claiming 90 to 95% or even 100% success rate and show causing fabulous past performances. You may also receive various phone calls from stock tips provider to join their trial services. During the bull market, such calls are very common. I used to receive many such calls. Initially, I wondered how they got my phone number. Later, I realized that many companies sell their database of clients. Once we open a trading account, it is possible that our mobile number are sold to various stock tips providers. Nowadays, I answer to such operator. I don't trade or even I am not interested at all stock trading. Figure out fake stock tips provider. Figuring out fake stock tips provider. Be aware of trading tips provider. Trading includes intraday, short-term future options. Be aware of high return promises. A 50% plus monthly return promise is certainly fraudulent. You should only choose equity advisor who provide investment tips with detailed logic or tutorials to share knowledge. Most trading tips providers don't provide any logic. They just tell you to buy with target and stop loss. Ask them what is the rationale behind the call. Find out whether they can provide any satisfactory answer or do they avoid answering your question. Don't get fascinated by the fabulous record and a few client testimony. Those can be false as well. Various new methods are emerging to trap innocent investors. You might also find many operators showing screenshot of hefty trading profit to tempt new fraud. However, if you open two trading accounts and go long, buy in one and short sale in another, then every day there will be a huge profit in one of those two accounts. Thus, even a person with zero knowledge can produce daily hefty trading profit screenshot simply by opening two trading accounts. Don't fall for such trap just by looking at profit screenshot. Before selecting for any advisor, check their knowledge and experience in the stock market. Very high return promise within a short period is dangerous. Dangerous traps to be avoided. Okay. Temptation from friends, colleagues, or neighbors. Hey bro, today I made 10,000 from the stock market. I you may receive a similar message from your friends, colleagues, or neighbors. During the bull market, such comments are common. The fact is that your friend won't message you with the same enthusiasm when they lose money. They mostly share the occasions where they earn. It is a human nature to take great pleasure from sharing achievement with people you know. On the contrary, sharing failure is shameful and hard. My son came first in his class. Is very easy to share and a matter of pride. My son failed in mathematics. Is not as easy to share with friend. Similarly, in the stock market, it is a matter of pride to earn rupees 10,000 in a single day. To summarize, a statement like I made rupees 10,000 is just a single part of the story. Be wary of jumping into the stock market just because of such partial information. Don't get excited by your friend's success story because they may well be masking their losses. Especially don't follow advice and stories on social media as these are unlikely to be the complete story. Temptation from your broker. Your broker will offer reduced brokerage for frequent trading or a large volume of trading. They will always be ready to offer high margin money for trading. They may try to convince you with statements such as you have 20,000 in your trading account. Not an issue. You can buy shares worth rupees 50,000 and sell it within 3 days to pocket more profit. Planning for intraday. Well, you can trade worth rupees 1 lakh. Many brokers offer such terms. What they don't mention is earning for them, not earning for you. You may also receive SMS alert or email alert as trading tips from your broker. Have you ever seen your broker offering an investment idea that is for 2-3 years holding period? They cannot offer this because their broking business will dry up. If you buy today and hold them for 2-3 years, but in fact, this is what you should be doing. Wealth can only be created over the long run. In the short run, frequent trading can only increase your chances of losing money and increase the broker's earning. Temptation from so called analysts. During a bull market, any pretender can consider themselves as an equity analyst. With the advent of the internet, you will find thousands of self claimed analysts on social media. Whenever the market goes up, you will find television, newspaper, website flooded with stock tips. Almost every analyst will draw a rosy picture and encourage you to invest in stock. Surprisingly, the same analysts reverse their stance during a free falling bear market. The worst part is that during bear market, these analysts will even mention avoiding the stock market, fearing that it may fall further. The reality is that during the bear market, the quality stocks are always at a cheap rate and thus it is one of the best time to invest. Moreover, if you select quality stock, then overall market movement rarely matters. Don't get carried away by any analyst. Temptation from stock tips provider. Nowadays, it is common to get phone calls and SMS alert from various stock tips provider. Eye-catching advertisements are so popular. I have already proved how any stock tips provider can trap you by offering a free trial. Remain Remain alert whenever you notice high return promises. Many trading tips provider claims 50% plus monthly return from their trading strategy. If that was truly the case, the today early every billionaire would create their fortune from stock trading. Reality says somewhat different. Overconfidence. Suppose you started investing during a bull market and successfully earned a 45% return at the end of your first year. All your purchased stock were performing well. In such a situation, you may start thinking you have mastered the subject well. As the market moves up, so moves your confidence level. You keep on increasing your investment amount. You are now too aggressive. Suddenly, the market crash and there comes a prolonged bear market. It is the bear market that separates intelligent investors from others. Don't get lured into investing aggressively if you find your portfolio giving above average return during a bull market. The stock market does not move linearly. It's easy to make money during the bull run but difficult during the bear period. To become a successful investor, you need to learn the art of making money across all market situations. Subchapter 5 1.5 Only way to earn consistently from stock market. The only way to earn consistently from the stock market is to invest in a great businesses and hold the stock for an appropriate period. Check the details of any billionaire equity investors across the world. You will find one thing common in them. They choose high quality stock and remain invested over the long run. Warren Buffett, the world's most successful investor and one of the world's richest people, created his fortune from a 22% annualized return over more than 50 years of equity investing. He did not jump into intraday or future and option. Just think, 22% annual return consistently over 50 years creates a billionaire. And these trading tips provider claims 50% plus monthly return not likely. Forget about intraday. Short-term trading, future and options. Remember, there is no shortcut of making money. Every quick money making trick is actually a money losing trick. Investing in high quality stock and holding them for the correct period is the only way to create wealth. This statement is easier to say than to execute. Here are the obvious questions. 1. What do you mean by high quality stock? How do I select high quality stock? How do I determine a quality business in the first place? What is the correct holding period? When to buy and when to sell a stock? How do I structure or how do I construct my portfolio? I will cover all these questions in the second part of this book. Before that, let's have a look at the risk of equity investing. In the next chapter, you will learn whether stock investing is risky or not and how anyone can minimize the risk. So, friend, the first chapter is over. Now we read or move towards next chapter. But before that, point to remember is the point to remember the one nutshell has been given by the writer. One is the only way to accumulate wealth from the stock market is to invest in high quality business stock and hold for an appropriate period. Second is you cannot make money consistently via any form of short term trading, intraday, future and option, margin trade, etc. Third is your broker, stock exchange, and government can surely become rich from intraday, FNO, and short term trading. You cannot. Don't get tempted by fancy stories or fabulous past performance screenshot in the stock market. Verify the knowledge and experience of the advisor. Don't invest in stock with any form of borrowed money, margin money, borrowing from friend, family, etc. it carries a significant amount of risk. So the first chapter is over. Now we move towards the next chapter about the risk. But okay, thank you. This chapter, the second chapter, is to be continued, but the playlist uh, is made for the second chapter. Okay, still you can learn from the first chapter. Please subscribe and click on bell icon and share the books or the clips or the videos. Okay, and if you want to buy the books, you can buy the books on the by clicking on the below links. Okay, below link of Amazon or Flipkart. Okay, thank you.